Recently, there has been a lot of talk on the possible economic crash that China will go through soon. But the problem is that very few people are talking about how this will affect your investments. What matters finally is the impact this economic crisis will have on your portfolio. So, if you wish to safeguard yourselves from this enormous economic crash, watch till the end. First, let's understand what's happening in China very briefly. The International Monetary Fund (IMF) has cut China's 2022 GDP from 5.5% to 3.3%. The current unemployment rate among the young population in China is 20%. This means that every 1 in 5 person in China is unemployed, which is a huge burden on the economy. Strict lockdowns due to the COVID-19 have created a huge dent in the Chinese economy, which is known for its cheap manufacturing. And due to the lockdown, many industries were closed, which led to this situation. There is a real estate bubble that is soon going to burst in China. All of this, added with the severe drought and heat wave China suffered recently, has brought the largest economy to its knees. Now that we know what's happening in China, let's understand how it will affect the world and USA. China is one of the biggest exporters across the world, and an economic crash in China will result in a drop in export volume, which will cause an economic slowdown for the whole world. USA will be badly hurt because majority of the industry giants have manufacturing facilities in China, which will lower production due to this crash, resulting in a recession. Knowing that a recession might be around the corner, we need to take steps now so that we are not burned down by it. Number 1. Invest in defensive companies. During unstable times like these, invest your money in food and beverage, consumer staples, and healthcare sectors. The companies in these sectors provide moderate returns when economy is booming, but provide above average returns when everything is going downhill. The reason behind this is that even when the economy is going down, people are still gonna need food, people are still gonna need basic home necessities, and people are still gonna need healthcare. People might not purchase a phone or a car in recession, but they will surely purchase food, basic appliances, and healthcare services. Select these sectors and then choose companies within them that have stood the test of time. You can find many companies that have gone through recessions in past but have not dropped even during that time. So the companies in this sector with long history of consistent performance are much more favorable. Number 2. Companies to be avoided. Some companies stay resilient in the face of recession while others can go through disastrous losses. There are sectors that you should be very cautious about during these times. The sector most affected during recession include materials, energy, industrial and tech giants. When the economy is in boom, the sectors like materials, energy and industry will give you exceptional returns. This is because when economy is in boom, demand is high, which results in higher production and higher profits. But during market slowdown, demand decreases, which results in lower production and lower profits. So metals, energy and industry sector are hit the hardest during recession. If we look into the tech sector, the majority of the production facilities are located in China. The products are manufactured in China from where they are imported back in USA. So an economic crash in China will result in lower production of these products, which will lead to the drop in stock prices. So as far as possible, try to stay clear of these sectors. Number 3. Generate a steady income. The worst fear people face during a recession is running out of money. This fear makes them sell out the stocks during the bear cycle. But if you have a steady income stream, then you don't have to fear anything. There are many ways from where you can get this income. The simplest way is to invest in dividend stocks. So even when the times are hard, you will still get some money from your dividends. If you don't know which companies to pick, you can choose from dividend aristocrats. This is a group of shares that have increased their dividend consecutively for the last 25 years. This will make sure that even during recession, you will receive your dividends as proved from history. Another thing you can do is to invest in real estate. You can buy a property and rent it out to others. This will again generate a steady income. Even if the property loses value during the recession, you will still receive your rent, and you can sell the property after the recession is over for a huge profit. Number 4. Invest in bonds or commodities. A solid investment to combat the looming Chinese economic crash is the US Treasuries. US Treasury bills, bonds or notes are among the safest investments since these assets are backed by the full faith of the US government. Meaning, it is guaranteed that you will get the full return on your investment as long as the investment is held until its maturity date. These assets are popular and likely to rise during the times of economic uncertainty. Buying US Treasuries is easy after creating an account at the Treasury Direct website. Precious metals like gold and silver tend to perform better during these times. You can invest in precious metals in a few different ways. The most straightforward route is to buy coins or bars from a seller or coin dealer. While this is different from buying a security, it's technically as good as any other option. If you wish to invest in precious metal securities, then you can choose to invest in exchange traded funds. Number 5. Diversify. This is the best and the most effective way to combat recession. As we have mentioned in the previous points, you can invest in specific sectors, dividend stocks, real estate, precious metals, bonds, and treasuries. All of this is to diversify investments as much as possible. The reason diversification is so important is that even if some of your investments take a hard hit due to the market condition, your other investments will balance it out so that it won't bring you disastrous losses. Yes, it is true that you won't make huge profits, but this will save you from losses. No one knows whether the Chinese economy will crash or not or when it will happen, but it is always better to prepare for rainy days rather than getting wet. Thanks a lot for watching this video. Do like and subscribe to show your support. We'll keep making more videos on earning, saving and investing money. One stop to all your money problems. See you in the next video.